Tesla, it is the big day, folks. Tesla earnings are out, and man, do we have a lot to go through in this video here today. This is a beast of a video. We got to go through some very important metrics and numbers that not a lot of people are showing you that I want to show you in this video. I'm going to show you the bad, I'm going to show you the good, and I'm going to show you the great, which Tesla had a mix in this earnings period of some bad numbers that I'm going to definitely have to show you, and some good numbers and some absolutely great numbers. I'm like, okay, there we go. This is the most anticipated Tesla earnings in quite some time in terms of just people being worried. Might be, to be quite frank, this might be the most worried I saw investors going into an earnings period since probably 2019. And I've been a shareholder of this company for many, many years, so I've been through this whole ride, but definitely a lot of worries. And Tesla didn't come in with that sort of quarter that made you say, oh my gosh, the world's ending or something for Tesla. This is actually a very solid report. We got to go through everything. And in the second half of this video, by the way, we're going to go through some things that are going on in the market that I want to show you guys in today's video. So if you want my opinion, not just on Tesla, but also the market, because there's some strange stuff happened today in the market that I want to show you guys, and some insane moves for some stocks that I want to show you. If you want to stay tuned for that, that'll be in the second half of this video. But the first half of this video is all dedicated to Tesla. Huge earnings here. Nonetheless, hope you guys enjoyed. As always, I appreciate every single person that subscribed to the channel. And let's just get straight into this, guys. It's an action-packed, busy video here today. Okay. Now, the first thing I like about Tesla is, for the longest time, the worry, especially when I first started investing in this company, was around profitability, was around their cash, right? In terms of their highlights, what's the first thing they're showing nowadays? Their profitability and their cash. And I appreciate that in a huge way. You go through a few of these numbers, incredible, right? 16.8% operating margin 2022, 16% in Q4. So that means operating margin fell a little bit in Q4 versus overall year, right? But still incredible operating margin numbers. $13.7 billion in GAAP operating income in 2022, 3.9 billion of that came in Q4. Incredible. $12.6 billion in GAAP net income in 2022, 3.7 of that came in Q4. $14.1 billion in non-GAAP net income in 2022. $4.1 billion that came in Q4. Incredible numbers. As far as cash, operating cash flow of $14.7 billion, operating cash flow of $3.3 billion, and free cash flow of $1.4 billion just in Q4 alone. $1.1 billion increase in cash and investments in Q4 to $22.2 billion. You know I love all those twos. The only thing I like more than all those twos is all those sevens, okay? Those are all amazing numbers. The progress this company's made on their profitability and cash, but that's nothing. Wait till some other numbers I got to show you in this video later. It's going to illustrate the profitability. Incredible. But that is good, okay? Now this is one of the most, if not the most important thing in this entire earnings report, okay? Certainly up there. These three little paragraphs right here. Look at this. As we progress in 2023, we know there are a lot of questions about near-term impact of uncertain macroeconomic conditions in environment. So basically that's just saying, how the economy is doing, how the business environment is doing, right? And in particular with rising interest rates. The Tesla team is used to challenges. Absolutely they dang are, okay? Given the culture required to get the company to where it is today, in the near term, we are accelerating our cost reduction roadmap and driving toward higher production rates, while staying focused on executing the next phase of our roadmap. That's key. People saw the price cuts. Well, people that aren't really educated on Tesla, they saw those price cuts and they said, oh my gosh, this is the end of the world for Tesla. And it's like, if you know Tesla's roadmap, this is part of the process. This has always been part of the process. This is nothing new. They're supposed to bring down the cost of vehicles over time and make it, hopefully long-term, affordable to the masses. Tesla's never just wanted to be some niche automaker that sold vehicles that are $100,000. That was never, ever Elon Musk's plan with this company. And that was never, ever why anybody, including myself, ever invest in the stock. We invest in the stock because we believe this is going to be the biggest automaker long-term. Plus have a robo-taxi network, plus have a huge energy business, plus be able to do many other various things in their business in the future, right? That's why we invest in the stock, not because of whatever the price point is in the short term. No. Our ASPs have generally been on a downward trajectory for many years. Improving affordability is necessary to become a multi-million vehicle producer. While ASP's average selling prices halved between 2017 and 2022, our operating margin consistently improved from approximately negative 14% to positive 17%. That's ridiculous, okay? In the same period, in a matter of 5-6 years, to go from negative 14% to positive 17%. as far as your operating margin. It's just ridiculous, man. Just incredible. It's one of the only companies to ever do something like that. This margin expansion was achieved through the introduction of lower cost models, build out of localized, more efficient factories, vehicle cost reduction, and operating leverage. Very key, operating leverage, okay? In any scenario, we are prepared for the short-term uncertainty while being focused on the long-term potential of autonomy, which is basically vehicles driving you around, robotaxi network type opportunity, electrification, and energy solutions. Our relentless cost control and cost innovation is why we believe there's no other original equipment manufacturer, OEM, is better equipped to navigate through 2023 and ultimately succeed in the long run than we are. Absolutely. That paragraph in itself is huge. Let's start diving into some of these numbers. Now, I got good numbers in green. I got bad numbers in red here, okay? So, first off here, automotive numbers, as far as automotive revenues, up 33%. For what was supposed to be a disastrous quarter for Tesla. I mean, 33% growth for automotive revenues, extremely impressive. Think about how bad other companies are being hit, how bad their business models are being hit, especially anything that sells higher priced anything, especially anything that you have to take out a loan to get, which is mostly cars. To have 33% growth in autos is ridiculous, absolutely incredible, okay? Automotive gross profit, only up 13%. So I would have liked to obviously see that number at least more in line there with automotive revenues. Automotive gross margin, down 466 basis points, not something we really want to see as far as that goes. Total revenues up 37%. For what was supposed to be a disastrous quarter, that's incredible. As far as total GAAP gross margin, negative 360 basis points. Oh boy, we got a baby here. Hold your dang horses for just a moment. See, that's why everybody's always telling me, well, I don't want to say everybody, but certain people are telling me, get in office, Jeremy. It's ridiculous. You have babies interrupting you. It's out of control. Now, we got a lot of green in a row here, okay? A lot of good numbers. Operating expenses only up basically down to actually 16%. That's impressive. Income from operations up 49%. Operating margin up 129 basis points. Adjusted EBITDA up 32%. Net income, I love this. Net income on a GAAP basis grew 59%. Net income on a non-GAAP basis grew 43%. I love it when my companies are growing net income at a faster clip than they're growing revenues, and that's exactly what Tesla did here. EPS, same exact situation, essentially. On a GAAP basis, up 57%. On a non-GAAP basis, up 40%. Now, a few bad numbers, okay? Net cash provided by operating activities was down 29%. As far as free cash flow, that was down 49% in this particular quarter. Cash and cash equivalents on the other side is a good number, up 25% year over year to, once again, right around $22 billion plus now at this point in time. So in a great financial position. In terms of the overall year number, I don't even need to go through this. It's all great. I mean, it's all great. It's green across the board. The year, just incredible. It was a credible 2022. I understand the stock price absolutely got smashed. Stock price was down like 70% or something insane in 2022. But let's be honest, it doesn't really reflect what happened with the business fundamentals. That had to do more with the overall worries about whatever's going to happen in the economy, worries about obviously rising interest rates, paying less for stocks than you might have previously, and the Elon Musk Twitter stuff. Like, it had everything to do with everything but Tesla's business model, because absolutely, it was a record year across the board for everything for Tesla. Absolutely unreal year, okay? Next up here, a few good things and one bad thing, okay? So Model S and X production up 57% year over year. 3 and Y production up 43% year over year. Now, this is not a good number. This is not something you want to see. Global vehicle inventory days of supply was up 225%. But that was at the end of Q4. I can tell you, since they dropped the price, it's not like that anymore. If anything, we might be at record lows right now. I mean, honestly, or getting very close to record lows. Let's just put it that way. So this was absolutely an issue at the end of the quarter, but literally as soon as they dropped price, like that inventory went, people started buying them left and right. Solar deployed up 18% year over year. Storage deployed up 152% year over year. That's quite a number there, okay? These are businesses, by the way, these businesses are just forgotten with Tesla. Like, obviously, the automotive business gets all the focus, and so these numbers just end up being forgotten. But gosh, I mean, we'll see what happens with those businesses long term, but they definitely have potential. Store and service locations up 19%. That's good. But bottom line is, if Tesla keeps having more and more vehicles hit the road, We need more store and service locations, bottom line, okay? Mobile service fleet, 24%. I've used this several times where actually Tesla comes to my house and does something if I need anything done, a battery changed or whatever, right? So, I just actually had to have a battery changed in the Model X when we were in Arizona a few weeks ago. And I didn't have to drive that anywhere. They came to the house in Arizona and got it all done. By the way, did we even pay for that? I don't know. Supercharger stations up 35%. Absolutely, we need that. Supercharger connectors up 35%. These are all numbers we have to see. At the end of the day, if you're going to talk about Tesla's going to double, triple its fleet of Teslas on the road over the next year or two, 2-3 years, we're going to need a lot more supercharger locations because not all of them get busy, but some of them get really, really busy, especially a lot of the locations in California. Whenever I go out to like Southern California and whatnot, super busy. Like sometimes you have to wait 20-30 minutes to get a supercharge at some of the Southern California locations, right? So, some of the Arizona locations, usually you can pull up and get a spot, but trust me, man, if you're going to talk about this company's going to sell another 500,000 vehicles and another 1 million vehicles, and you just keep rolling like that, it's going to be at a situation where you're going to have more superchargers. People are going to start getting frustrated that they have to wait too long to get supercharged, essentially, right? Now, in terms of capacity here, SNX, as far as the California location, the Fremont, 100,000 vehicles. 3 and Y, 550,000. Model 3 and Y, 750,000-ish. Let's call it in Shanghai. That's incredible. Berlin, 250,000-ish just for Model Y in the Berlin Gigafactory. Texas Model Y, 250,000-ish, right? And don't be surprised at all if they can get more than these numbers out of these locations. Because, I remember when Shanghai, they were not talking about 750,000. Not even close to that. Okay, I remember in Fremont they used to think like they could max that out. Oh gosh, I think the old number used to be they thought Tesla would be maxed out at like I want to say like 400,000 vehicles a year, something like that. It might even have been less than that. And obviously they've proven they can produce a lot more out of Fremont, right? So yeah, you see these numbers, and I would just say don't be surprised if they could actually produce more out of those locations than the numbers you're actually seeing right there in front of you. Okay, next up here. This is important. This is not a thing that a lot of people are going to look at, especially people on Wall Street, but this is important. Cumulative miles driven with full self-driving beta in millions, right? No one else is doing this. With a full self-driving like this, like no one's collecting those sorts of miles right now. And so this is huge for Tesla because they're on the brink of truly making FSD like a reality. We're getting very dang close, right? That last 3 to 5% is the hardest in my opinion, but we're getting really dang close. These cars are starting to do some amazing stuff, right? And they're starting to get to a point where they just have these little kind of things that are kind of holding them back. Let's call it that. Like let's say, for instance, you pull up to, maybe a roundabout or, maybe a 4-way stop, and maybe the car is just not aggressive enough. It's kind of like goes out too slow, like driving like, come on, man, like what are you doing here? Those sorts of kind of weird situations. It seems like FSD has awkwardness, I would call it like that, in the driving, where it's like it's still driving too much like a machine and not like a human would. So I think once they get that fixed over this next year or two, I don't see anything else like not being there. Everything else is pretty much there that needs to be there. It just needs to get rid of this last awkward stage, I call it, okay? As far as miles driven per accident, look at the chart. It's incredible. Tesla vehicles using autopilot technology. It's massively, epically less than other vehicles. Look at the United States average down there, right? United States average. The bottom line is Teslas are massively, epically safer than other vehicles on the road. And it's not an opinion. It's a fact. It's a fact. And so whenever somebody, there was even another, YouTuber that I really respect on a high level on this platform, but they make some jokes sometimes about Tesla and trying to like put it in a light that it's not as safe as other automakers or something like that. I'm like, it's far safer. It's like massively safer, like not even remotely close. That's a fact around that. So anytime you hear somebody kind of say something like that, like just correct them with the facts. Like, be nice about it, but just, you can pull up the charts, show them the facts around this, okay? Next up here, this shows you energy storage deployments over time. Incredible, right? And look at how that business is scaling. Once again, we don't even talk about this much, but, imagine where that business can be in 5 or 10 years from now. It's just incredible, right? Number of supercharger locations as of the end of 2022, we're up to over 4,500. I think the next great possibility for Tesla is announcing some huge relationships with maybe some national retailers or fast food restaurants to get some, Tesla superchargers and some of the, like for instance, Target, I think a great opportunity. Like why doesn't Tesla and Target do some sort of big relationship? Target's all over the United States to deploy, 2 to 4 superchargers at Target stores around the nation. I think that would be a great thing, right? Even at my local Target, they actually have electric superchargers, but it's not really like Tesla branded. I think that's potential. Why not like have a few at, I don't know, McDonald's or some different restaurants, right? I don't know, Cracker Barrel? Man, it might be a good place to have a Cracker Barrel. I don't know, just like those are the sorts of opportunities I think about that I'm like imagine if you knew you could go to this fast food establishment and no matter where you went to that fast food establishment across the entire United States, you knew you could charge your Tesla, right? Let's say it was Taco Bell. You knew that every single Taco Bell in the entire United States had like 2 Tesla charging spots at it. Like that would be pretty cool to know that, right? So I think that's actually the next huge opportunity for Tesla. Don't be surprised if you hear some about that in the future there, okay? As far as our outlook, I know that's what a lot of people are focused on here, right? Volume. We are planning to grow production as quickly as possible in alignment with a 50% CAGR target we began guiding in early 2021. In some years, we may grow faster, in some we may grow slower, depending upon a number of factors. For 2023, we expect to remain ahead. This is big. For 2023, we remain ahead. We expect to remain ahead of the long-term 50% CAGR, with around 1.8 million cars for the year. That's extraordinary that they're expecting that sort of strength. That's extraordinary, folks. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. Good. Profit. While we continue to execute our innovation to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied by an acceleration of software-related profits. So think of it like this, right? If you sign up for FSD, it's like $199 a month in your Tesla, right? If you sign up for their like satellite maps and all their connectivity and stuff like that, I think it's like $10 a month, and I have that on both our Teslas. And so there's all these other opportunities that Tesla's going to have over the next many, many years where they're going to be able to make money after they sell you a vehicle with all these different cool things, right? Imagine something that makes your car go faster and you pay an extra, I don't know, $15 a month for that or $20 a month for that. Like there's so many opportunities there that it's hard to even like wrap your head around that, right? So we continue to believe our operating margin will remain the highest among all volume OEMs. Yeah, absolutely. Product. Cybertruck remains on track to begin production later this year at Gigafactory, Texas. Heck yeah, baby. Our next generation vehicle platform is under development with additional details to be shared at our Investor Day, March 1st, 2023. Oh boy. So anybody that's really educated on Tesla knows how big of a deal this is. Anybody that's not in the know probably doesn't even like get what they're talking about there. Our next generation vehicle platforms under development with more additional details. And I mean, this is a vehicle that, in my opinion, is that robo-taxi true opportunity, that insane mass market vehicle. So we don't know for sure, but don't be surprised. And so we're going to get more details, and that's soon, man. I mean, we're already at the end of January. March 1st is not that far away. Whew, you think there's going to be some excitement buzzing going into that thing? Oh, yeah, I think there's going to be a little bit. Now, they show a few pictures. I didn't snap too many of these photos, but in terms of to kind of show you guys, but just showing you Gigafactory Shanghai, body shop, all those robots there. Gigafactory, there's announced some expansion, which that is just a huge opportunity in terms of semi, in terms of batteries, everything like that. They showed here the Gigafactory Texas in their 4680 cells, which those cells are supposed to have increased energy density, no tabs. It's supposed to be able to streamline manufacturing and lower cost. So, I mean, those 4680 cells are a big deal for this company in terms of production and in terms of likely long-term profitability. And it's one of those things, like if you're super into the Tesla community, you know about these cells. If you're not really, you probably never even heard about the 4680s before. Next up here, look at this. I mean, this is, if you were to draw up a business, right, and like put it into some spreadsheet and try to like have it grow perfectly, which we know business is never perfect. There's ups, there's downs, there's all arounds, right? This is almost as perfection as you can get. Like literally, this is almost as perfect as you can freaking get. Vehicle deliveries, operating cash flow, free cash flow, net income, adjusted EBITDA. Like it's almost perfection. In business does not work in perfections, especially in a time period like we've gone through over the last number of years here. It's been very uncertain times, right? Now, in terms of stock price, wasn't moving too much after hours. And the reason being is it's all about the conference call. Now, the conference call is the conference call is literally going on as I record this video right now. Now, here's the deal, okay? This stock will be up 10% plus tomorrow if Elon sounds very bullish on the conference call. If he's super bullish on this conference call, be expecting a 10% plus move tomorrow. If he's not, and he's just kind of, let's call it more monotone Elon, let's call it kind of like, skeptical Elon, don't expect a big move tomorrow. Expect a very small up move or actually a down move for the stock. But I'm telling you, if he's full bull, this stock is ready to go insane. If he sounds super bullish on the conference call. So we'll see what happens. It's going on literally as I record this video right now, and I'll listen to it tonight. But yeah, we'll see. And I'm going to do a breakdown of like the conference call on Farzad's channel tomorrow, likely. Okay. Now, in terms of myself, am I going to buy any Tesla shares, right? So obviously, we've been doing tremendous on the position. We're up $200,000 as of right now. My plan is to, yes, continue to buy Tesla shares. And this is regardless if it goes up or down tomorrow. I'm hoping it goes down. So I'm hoping Elon's not very bullish on the conference call. But if he is, the stock's popping huge tomorrow if he's super bullish. But nonetheless, I'm a buyer regardless. I mean, at the end of the day, they're too special of a company not to continue to load up on shares of. The reason being is they just continue to beat everything, man. I mean, to come out with a revenue beat and an EPS beat today on this quarter that everybody was so worried about, and to come in with the margins they come in with, to come in with the production numbers they're coming in with, to come in with the amazing products they have and the roadmap they have and the team they have. And it's just, I think it's the most well executing company we have in the world right now. And that's saying a lot because we got a lot of companies that execute very well, right? I mean, you got Apple that's always on top of their game. You got Amazon that's always on top of their game. But I ultimately feel like Tesla's probably the most well-run company in the world right now. And I understand like the whole Elon Twitter stuff, but at the end of the day, look at the numbers. Like the numbers don't lie. You can have an opinion about, oh, this guy's spending too much at the time at this other company. At the end of the day, you got to look at the numbers. You got to hear what these companies are saying. And at the end of the day, I don't know if there's a company that's more well-run than Tesla, just to be quite frank. So ultimately, it's a buy, man. It's a dang buy after these earnings. Absolutely incredible. This was the one that was supposed to take them down, take them way down, right? And they got through it. Incredible. Absolutely incredible, okay? Now I want to talk about the markets for a bit and other stocks. So if you want to enjoy this piece with me. If all you came for was the Tesla stuff, hey, I love you too, man. I appreciate you, okay? All right, so something very strange happened today. Very, very strange in the market. NASDAQ tanked right into the open. Tanked, man. And you thought, okay, market maybe coming back to reality a little bit, realizing, hey, Microsoft's not the whole stock market, realizing that's just a solid business model. And so, maybe there's going to be a big down day for the NASDAQ. But what happened throughout the entire trading day is that baby just climbed and climbed and climbed. And it was hardly even down today. Hardly even down. And it just kind of goes to show you the strength of this stock market right now, where it's just like, it doesn't want to dang go down at all. I mean, in the NASDAQ even finished red. S&P, I believe, finished red as well, right? Public count was still up. It was still a decent day in the public count of $5,200 here today. In the public count, like I wouldn't even have known, the market was down big red at the open to finish up $5,000 plus there, right? The new Patreon portfolio was up over 1% today. I know it's a really small dollar amount, right? Because we just started that account literally here at the beginning of January, and I do a $150 deposit every single week and buy new stocks with that. By the way, if you want access to all the stocks I'm buying and selling in that portfolio, check out the pinned comment. Or it won't be the pinned comment down there, but it'll be in the description area if you want to join me on Patreon, support the channel, and be able to see all the moves I'm making in the market as far as that goes. But that portfolio is up very nicely again. And by the way, I got the money in there, the new $150 ready to buy stocks on Friday. What stocks will I buy? Maybe a Tesla. We'll have to see. As far as some red hot stocks, check out some of these stocks, guys. Shopify is as hot can get. Holy smokers, that ain't no dang jokers. This stock has climbed 58% in the past 3 months. 58%. Congrats to all the shop buyers that were buying in the fall time, man, because you got some steal deals. Even in the summer, like anybody that was buying in the summer and into the fall time of Shopify, it's just such a tremendous company for the long term. And it got completely thrown out. It reminds me a lot of Amazon when Amazon had to get hit super hard going, in the tech bubble. Except Shopify is a much more established, well-built company than Amazon was in the tech bubble, the disaster there. So, but it reminds me of very similar and just an incredible company. It's one you're going to make a lot of money on over the coming years. But just a red hot stock. But that stock has so far to go. Like that's going to be, I wouldn't be surprised if that's a $500 stock someday. It's going to be a long time from now. It's in terms of being $500, but it's going there long term. I can tell you that. There's no doubt in my mind. It's one of those companies that I think it has a potential to be $1 trillion market cap someday. It might be 10 years from now, but it has that sort of runway of growth in front of it. Avant Brands is red hot. This is in the past 5 days. This stock has climbed 37.8% in the past 5 days. The reason being is they just reported this ridiculous quarter of insane revenue growth, like some of the best revenue growth you'll see of any public company in the world. No joke, like in the world. And I think honestly the stock would be up a lot bigger, but everybody really wants to see net income because all they released was preliminary revenue numbers, which was absolutely just like sickening good. And so now everybody's kind of waiting to see like what's net income. I think if they had released net income and that was like a positive number or a good number or something like that, I wouldn't be surprised the stock had already doubled up or tripled up. But everybody's kind of waiting on that to see what happens there. Okay, next one up here. This is one of those stocks that this is incredible. Foot Locker, this is a stock I personally own in my dividends only account. I also own in the Patreon portfolio. This baby's made an 11.11% move in the past month. This stock is red hot. This is a dividend stock. This is a boring dividend stock, solid company, right? They own Champs, they own Foot Locker, they own Kids Foot Locker. You see them in the mall. Solid company, boring company, great dividend payer, 4% plus yield, right? And you don't usually expect to make great gains on the stock. Me investing in a stock, I think maybe I can get on average a 5 to 10% return as far as like the stock price, right? But it's not going to cause me big downdrafts, and I'm also going to be able to collect the nice dividend money that I'll be able to throw in more shares of Foot Locker or other stocks. So 11% plus move in a month is that baby is red hot. But it's got an insanely low PE on this baby too, right? So could that stock continue to run? Absolutely, if they just come in with decent numbers. Corsair's really hot. This is a value stock, right? Another not super exciting company, solid company. They should have nice revenue growth, margin growth, and net income growth in 2023. I'm expecting a trifecta there, right? But it's not like a super exciting growth company. It's not like a Shopify or something like that or a Tesla. But 13.6% in the past month, that's red hot for a stock like that. Palantir's getting into the red hot category. In the past month, Palantir's up over 18%. This baby's got a long way to go over the next few years, right? But, this stock, it kind of bottomed out here and recently in the sixes and, just kind of had everything thrown at it, including the market, including retail destruction, because this was a big retail stock, right? And just had relentless selling pressure on it, tax loss harvesting. It had to go through everything, right? Slow government contracts and all that. And nonetheless, it's working through all that now. And don't be surprised if that one stays red hot for the next 3 years. Not 3 days, not 3 weeks, 3 months, 3 years, okay? Tesla red hot. This baby's up 28.5% in the past month for good old Tesla. Yeah, like I said, if Elon sounds super bullish on that conference call, that baby's going back to 200. Meta is red hot. The stock up 20% in the past month. And should be an interesting earnings out of Meta there. I'm not expecting great earnings as far as the numbers go. I'm expecting okay, but I'm expecting some really exciting user metric numbers, especially around Instagram Reels. Something I want everybody to pay attention to, and I told the private stock group this as well. Pay attention to this company. No one's paying attention to this company. Pay attention to their earnings tomorrow after the bell, okay? Knight and Swift. If you really want to know how the economy is doing, the outlook for the overall global economy, the U.S. economy, pay attention to this company's earnings, okay? Pay attention to their guidance, listen to their conference call. That one is super, super important, okay? Hope you guys enjoyed today's video. As always, appreciate everybody that subscribed to the channel, everybody that enjoys the channel. If you're looking to apply to join my private wealth group, check out it'll probably be the pinned comment down there. Much love and have a great day.